Most people have used Visa hundreds or thousands of times, but if you ask what Visa actually does, the answer is surprisingly hard. Visa usually does not lend you money. It usually does not issue your card. It usually does not work directly with the store. And it is not a bank. Visa is something more unusual. A global trust network that lets banks, merchants, and consumers transact with each other almost instantly. To understand why that matters, go back to the 1950s. Buying something on credit was not as simple as tapping a card. If you wanted to finance a refrigerator, a washing machine, or another major purchase, you might need to visit a bank branch, talk to a lending officer, and get a loan for that specific item. It was slow, manual, and expensive for everyone involved. Bank of America saw an opportunity. In 1958, it mailed thousands of unsolicited cards to customers in Fresno, California. The idea was bold. Combine convenience and consumer credit into one reusable card. Instead of approving one loan at a time, the bank could give customers a flexible credit line they could use at participating merchants. The first version was chaotic. Fraud was high. Defaults were painful. A lot of people did not understand the product. But Bank of America had something most banks did not: enough scale to survive the early losses and keep improving the system. Within a few years, the program became profitable. Then the bank tried to expand it beyond California by licensing Bank AmeriCard to other banks. That is when the next problem appeared. Inside California, Bank of America often sat on both sides of the transaction. The customer bank and the merchant bank were often the same institution. But once hundreds of other banks joined, the system became messy. Now one bank issued the card, another bank served the merchant, and everybody needed shared rules for authorization, settlement, risk, and fees. Bank of America had created something valuable, but the franchise model was not enough to run a national payments network. This is where Dee Hock enters the story. Hock understood that the credit card system could not be controlled like a normal corporate product. It needed banks that competed with each other to cooperate on the underlying rails. His core insight was simple but powerful. Each bank would be better off owning a smaller piece of a much larger network than owning a private system that could never become universal. That idea eventually turned Bank AmeriCard into Visa. The network became a shared operating system for payments. Banks could still compete for customers. Merchants could still choose their banking partners. But underneath, everyone could rely on common rules, common technology, and a common brand. The technology mattered just as much as the governance. Early card payments were not instant. For many transactions, merchants needed manual authorization. Settlement could take days. Visa helped build systems that automated authorization, batch settlement, and connected banks through digital infrastructure. Later, magnetic stripes and point-of-sale terminals made card transactions faster and more reliable. The card became less like a special credit tool and more like everyday money. That shift changed commerce. Cash was fast but local. Checks required trust. Card networks made remote commerce easier. And once e-commerce arrived, cards became essential. Without a trusted payment rail, buying from a website would have been far harder to scale. Visa did not just ride the internet wave. It helped make online commerce practical. The business model that came out of this is extraordinary. Visa earns a small slice of a huge transaction base. It does not usually carry the credit risk. It does not need to fund the loans. It does not need to own the merchant relationship directly. It mainly moves information, applies rules, and keeps the network reliable. When a business has global scale and very low marginal cost, the economics can become incredible. But the story has tension. Merchants often dislike card fees because those fees eat into margins. Consumers love rewards, but rewards are funded by the economics of the system. And because card acceptance is so important, many merchants feel they have little choice but to participate. That is the duality of Visa. It creates enormous value by making payments simple and trusted. It also captures enormous value because the network is so difficult to avoid. The biggest lesson from Visa is not just about payments. It is about infrastructure. The most powerful companies are not always the ones users think about every day. Sometimes the most powerful company is the one sitting quietly in the middle, making everyone else able to do business. Visa became the invisible toll road of money. And once the world built its commerce on that road, the toll road became almost impossible to replace.